In this video, I want to bring your attention to a stock called BMRN Pharmaceuticals. BMRN is the symbol, BMRN. And so what I want to do is I want to come in here and I want to analyze this for you. This market has had some great news and has taken off like a rocket ship. Now, I'm not advocating that we buy right now, but I want to do a little technical analysis with you and show you how we know when it is time to get into this market. So the first thing I want to do is just draw some simple trend lines. We're going to come down here and identify the natural trend line, or what I like to call the spider web. All right, so we got a spider web line there. We got the next line comes in here, the natural trend line. Then we got the mathematical trend line. So the mathematical trend line breaks right here with this this blue line. And you can see that's right where the 9-day average and the 50-day moving average are crossing. And then we have a horizontal. Okay, so we come in here with the horizontal. Now this market gapped up over the horizontal, and so this was a very active market, as you can see. And if we come down here and look at the accumulation, distribution, and the momentum, these markets are both, or these indicators are both taking off like rocket ships. And so this was a real nice trade. We're going to come in here and draw a couple of more trend lines. We had you can see we saw this big rally, then we saw a pullback. So we're looking for higher highs and higher lows in there. So we have a nice little break in there where we kind of danced around a little bit after that big gap. Oftentimes markets will fill the gap. They'll gap back down, or they'll come back down, fill the gap, and then take off. This time this market was so strong it didn't come back and fill the gap. And so now we have a couple of little lines in here where we've got higher highs. And then the market rallied up nicely, pulled back, and then it tried to break that next high. Wasn't able to really go up and continue the big rally, which is about right what we're looking for. So we're going to come in here and I'm going to label these. This right here is A1, this is A2, and then this, of course, is A3. So let's go ahead and we'll throw these in here real quick. All right, so there's our labels. A1 is the first breaking of those blue lights. And then as the market came up and hesitated right in here, that becomes A2. And then the next hesitation, or this pullback, this micro pullback, and the breaking of the previous high becomes A3. Now, as we get higher up in the letters and higher up in the numbers, those are lower probabilities of success. So we like to get into the A1 if we can, but we oftentimes miss the A1 because we're down here looking at this market going sideways and not thinking anything of the A1. So the A1 is not necessarily a buy point. Our first opportunity in this case would have been that A2 right in here as the market started to rally for us. It then pulled back against us and then gives us that A3, and that's where we kind of die out right up in here. Now, as we come in here, I say die out, and then it doesn't mean the market can't certainly go up to an A4, A5. It's just very rare. A3 is generally the top. And then we see this market come in, and we anticipate it breaking those blue lights and falling to the next level. So this is where we're going to come in with our Fibonacci ruler, and we draw from the top to the bottom. And this ends up being kind of a target point down in here, or where we anticipate this market falling back to. Now, if it's a weak market, it'll probably fall all the way back into the Fibonacci sweet spot, which is somewhere between 38.2 and 61.8. But more likely, if this is a strong market, which it looks like it is, we're going to anticipate this market coming back, breaking those blue lights, and anywhere in this point here, we're going to anticipate it bouncing off this level, and then possibly this is where we're going to see the B drive. So we've got the A drive in here. The next drive would be the B drive. So the B drive would be where the blue lights come in, they cross, and we're going to get another spider web. All right, another one of these spider web looking things. And we're going to come in here with the speed fan this time, and we're going to draw that in there. We're going to get a natural trend line is what we're going to look for, and then we're going to look for the blue light crossover, the mathematical trend line crossover, and then we'll look for the horizontal. Now, as we come into this trade, we're going to want to be taking some profits at the horizontal. So we want to be getting in down here at the natural crossover as the market turns and rallies, or on the mathematical crossover when it breaks those blue lights. The blue lights will flip to the other side and start coming down behind this market. And that's where we'll be looking to get into the market to the rally. Now we can take some positions off as it breaks above the previous high, but this will be our B drive. So let's go in here and label that real quick. This would be B1 down in here. And then we would look for some sort of a pullback or a micro pullback like this, and that's where we would get in here somewhere. We would get the B2 and then of course anticipate a B3, and that's kind of what we would look for on this next rally. And it's this B drive that I'm excited about and looking for, and giving you a heads up that this market is getting ready to break, pull down, make the micro pullback, go through the spider web where we're going to look for an opportunity for entry and look for that B drive all the way up to B3.